Hello, 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 everybody. Oops. Oopsie. Oopsie. Look at that. I've been so busy, forgot the green screen. Little besides the scenes action there. Whoa. Just kidding. I did forget the green screen, though. I'm like, why does that look different? And now you know. So, good afternoon, Sashi. Hello, George. Good evening, Anissa. Hello, Rich. Hello, Jacob. Good afternoon. Hey, George. Hey, Gary. Let's see who else. I've had that opening music stuck in my head all day. Well, at least there aren't any words to it to drive you crazy. Is that a bad thing when you get the path trading music stuck in your head? Hello, Patrick. Hello, Christoph. What arcade game is that? It's an iArcade. It is an iArcade, but it is the jeez, now I am blanking out. With Dragon's Lair. It plays a bunch of games, so you can just look up iArcade. It's the Dragon's Lair version. Christoph, hello. I'm just getting back from celebrating a Canadian Thanksgiving. Are you Canadian, Andrea? Hey, I was born in Canada. See, you gotta celebrate Thanksgiving a little earlier in Canada because everything freezes, so all the turkeys would be cold. Oh boy! Speaking of that, we had a few snow flurries around the Chicagoland area, hit or miss. Nothing that stuck, of course, but snow flurries. It was cold this morning, cold day. Had to take a break and run one of my dogs to the vet, but she's now okay on medicine. So that's where we sit. I'm an old school kind of guy, Gary. But I got a lot of old school. I like the old school games. I can't play the new finagled games. I try. I tried. You know what? See, I can't. I can't do the PSP stuff or PlayStation anymore or anything else. If it's any new game, I'm on my Nintendo Switch, and that's about all I can handle with like a light Mario game or something. I'm old at this point. Andrea, Canadian, another Canuck. Well, I wonder if you're dual. I am dual citizen, but haven't been back to Canada in a few years. Haven't been back there. Used to be in Vancouver and Toronto a lot. I was trading in Vancouver. Had family in Toronto still. So, where do we sit? That's enough about this. Let's get to the markets. If you are new here, we've passed 6,000 subscribers. So if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. And I'll just leave it as that. Regulars, please hit that like button. No, come on. You can do that if you like the channel. Even if you don't, hit the like button anyways. All right, so we had a strong rally today. It was this now. Last Thursday was not a short squeeze rally. This was I mean, there's other stuff that rallied, but this was a short squeeze driven rally. This was a much more short driven rally, especially after some of the positioning on Friday. Also, remember with all this option gamma, we got a decent rally, but the breadth still stinks. Was not really happy. I'll just give you my macro thoughts from a bullish point of view, which I had the bullish signal trigger on the single candle stuff. Did not on the S&P get stopped on Friday, and then we got rallied back today. But this is not a strong rally yet. I mean, if you just look on the surface, yeah, look at how much it's up, but under the covers, not good. We'll get into that in a second. Tomorrow morning, remember there was nothing after that Empire contraction, New York manufacturing. Boy, I can't even talk. Wow. There was nothing today. Tomorrow, just minor industrial production during our live stream. I keep wanting to say podcast. This is not a podcast. By the way, there is a new Jim Iurio podcast posted. It has been posted. For some reason, you got to watch it this time. If you're trying to watch it on pure exposure, it keeps getting stuck. I got to do a deeper dive into that after this live stream. But so just go to the Path Trading Partners or go to Spotify if you're interested. The only thing, industrial production, then we have the housing market stuff, and that's it. So we have another very quiet day tomorrow. You can see, unless you're Schwab, there isn't much, or Altera. I still want to call it Philip Morris, but it's Altera. You couldn't really screw up today. And yeah, the numbers look impressive, but nah, they weren't that impressive. From a technical perspective, from breaking out of key levels, it was I'm not saying this rally can't continue. I'm still watching for some higher prices. Some a little bigger pop than this. But so far, it's mediocre at best. Also, what's so funny, like real estate, remember that's one I would not touch with. That was just a complete oversold bounce. As I went through those sector overview, real estate's not a sector, I'm going to run into for any even decent play. And this is the kind of stuff, there's lots of stuff that was oversold and shorts in real estate, and it was rip your face off rally. Communication services was another one. It's been in the doldrums. It's been a long-term sell, and people were rushing into that to cover positions and to squeeze some of the shorts. And so you see this just without even peeling back the covers. Cyclical stuff, there's lots that was beat up. And you got the 421 basis points. So it was a lot more. I'll call this the short crap rally. Not short meaning duration, meaning shorts and crappier stuff that was really doing more rip your face off. FOMC still 96% for the November 2nd. Still in negative gamma territory. Fear and greed back to fear, so at least it's back out of extreme fear again. Again, not much going on after the close, but tomorrow morning on the open, Goldman Sachs is going to be a biggie. Johnson & Johnson, Lockheed Martin. So there we got some biggies mixed in. Albertsons going through that possible merger. So that's more trading off the merger stuff. But the big ones I will be looking at: Goldman Sachs, J&J, and Lockheed Martin. Then after the close tomorrow, we got Netflix. I know there's some constant Netflix players in here. All right. I really need to see. We got 15 minutes left. The 62.5, see, it's hiding. 3,775. We're at 3,702. Are we closing above or below it? May not matter to most people, matters to me from a probability wise. And those are from the swing high from October 5th to the swing low from last Thursday the 13th. Why does it matter so much? Everybody, I'm boring the longer term viewers because we get a close above there. We should at least target 3780, 3780.25 to be exact. Does that mean it has to stop there? No. Now, in front of there for the shorter term targets, I'm using 37.27, 37.40, which we not only do we have some significance there, we also have the 75 harmonic, and then 37.80. So that'll be interesting. 4-hour cycles at the top, so we might see some pause up here by the Thursday/Friday early morning highs. We might see a pause. Key support, I'm watching this 4-hour rotation zone now. 36.61, flat 50, rising rotation zone, prior 50% harmonic, little key spike low from Friday. before that was taken out off the sell-off. That's my first level. Next level, 36.41. Yes, this is a clear path to the downside. There is some chop coming in here. So if you're going to want to watch some minor levels, this is how I really look at it. You can bump this down just a hair based off of some of this Friday volatility price action. But you see all in here is some key support chop. So overnight, I'll be watching 36.73. Then I'm going to 36.61, then the 36.41. You don't really want to see, and I don't really want to see from a trailing perspective, a move back below 36.41. I'd prefer not to see one below 36.60 for this rally to at least have stronger legs. Going into tomorrow, minor or overnight, if it does continue to pop, 37.24 will be minor. And then I'm going at 37.40 to 37.44. And remember, targets can be areas not only to possibly take start. Why are targets so important? Either take targets or raise stops, but you identify them before the market gets there, because then you've identified your action you're going to take and you're not caught off guard. You're not sitting there going, oh, I guess we rallied some more. What should I do? I've identified my key levels all the way up, even to tackle this high area from prior in October. I have identified my key levels. Then I even know my key level above there. Now, just to reiterate one other thing, that as we see that weekly 200s held, yes, we are into a clear path move on the weekly. But this is where things can be deceptive. We cut through these wicks into a clear path move, but we're not really clear of anything until we get above this 38.03, 38.05 area. Then we go into this little clear path move. So we still have a fair amount of stopping points overhead that shorts will be leaning against. All right. Well, it depends. Where's my bullish Coco? Why are you asking? Well, you're the one who says bullish mode Coco. Are you asking if this rally is going to keep going? Shouldn't you say it's a no-brainer? We're going to new highs? It was not a great and there, Christoph, again, this is why I love the people who attend this. Christoph, bringing up the volume. Yes, the volume. You can see. Look at this. There was your Thursday volume. Now, Thursday, again, I'll reiterate, a lot of people out there have said it was a short squeeze. Not a short squeeze day. Today was a short squeeze day. This was a program buying across with sweeping fashions. And look at the volume. Today, look at this volume drop off. I mean, this is volume back for when we got the little rally. That was another thing. Thank you again for bringing that up, Christoph. See this little rally? This is more similar to this. Now, this is similar also to the ways we started off some of the end of June rally. This is similar. We did pick up with some more breadth starting to break out mid-July, okay? But this is a weak sauce follow-through off of Thursday's very bullish day. A weak sauce follow-through. That's our new technical term. So, again, shout out to Christoph for bringing that up. What does that mean? For me to give stops more room and to get back to Coco's, will this rally keep going? It should. Why should it? We have not overdone it yet. We're coming out of major cycle bottoms on the weekly where we stayed pinned there, tried to do a pivot, finally got that pivot last week. I'm really targeting back to reset it with the weekly rotation zone, especially with daily cycles still moving up. So we could easily see more rally this week. Even with a pausing pullback day, should see more rally this week. That's what's key. I'm also watching because I really want to know in the next couple minutes. Right now, 3,725. Is it going to close above the 62.5? This 62.5, especially on large markets, look at this today. And by the way, if you're wondering, that was from the harmonics from these highs back at the 5th to the lows on the 13th for all those newer viewers. Pay attention to this level. Look at bam, 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 bam. It's a Flintstone level. We got the bam, bam level. Keeps getting hit against it today, and we're seeing where it closes. All right. Now, the NASDAQ, which, again, I mean, the numbers look impressive. 370 basis points. It was a day for me. It was day. There's your volume on the NAS. I mean, this is pathetic. Even this today's volume, even off versus last little pop at the beginning of November, weak sauce. Weak sauce. So, also NASDAQ nowhere near the 62.5 yet, still within this daily rotation zone. So guess what my target will be? Continued rally tomorrow, 11,263. Then I'll need that close. That close is key. Pullback levels. Pullback levels right now. This is too close. I mean, that's really just a sideways correction. So I'm just going to be watching this 1 hour rotation zone. If we start dropping below there, I'm going to bump this level down just a hair. This has a little more significance right in here and confirmed with some lows today. 11,028 to 11,000 is my pullback area for tonight. If we break below that, the next key area is until 10,915. Don't want to see a drop below 10,915. For the least for the aggressive short-term bullish case. Again, next minor target is still this 11,220. Major target 11,263. Then above there, we're going into a very decent clear path move with very little stopping points until we get to about 11,381, 11,4. So, let's see. Gary killed it today. Good job, Gary. There you go. There's your shout out from Jacob. And everybody's just too good. You don't need me. You don't need me anymore. Look, Rich, 10-year notes, went back to the lows and gave back gains. Keep an eye on that. I've become useless. It's one of the next things I was going to touch on. We'll peek in at the Dow and the Russell, but since you brought it up, this is another key point. The notes tried to rally, tried to sustain, little move into the daily rotation zone, and completely fell back to area of support and the key closing area from Friday. This was not bullish at all. The rally petered out very quickly, which ties me into this. So now my break below 110.17, retest of the low areas and 109.24. Dollar index, I'll jump back around. Dollar index, we broke below. When we broke below this 112.20 area, it was 2 lows and then the daily rotation zone and that 37.5 where we sustained. We break below there. I'll watch for continued market rally, continued pullback in the dollar, 111.07. I'm paying close attention to this to see if we can get a rotation, but now 112.20, 112.28 is key resistance. I want to see if it does rally, how it reacts to that levels. We're getting the daily cycles. This is not a huge pullback to get the daily cycles back to the bottom. So, again, we asked you still have the double, or I should call it the potential double top in play, but it's really interesting to see how far this will pull back. Also, the VIX did not, for the amount of rallying, this VIX stayed pretty elevated. Yes, it was a down day, but we could not even get back to this 30-50 level. So that was another thing, and especially the buying of the VIX into, or the snapback going into the close. We did not have that big a sell-off. Remember, the S&P, pretty much you had the counter trend. Then we had lunchtime, and then it just fizzled out. Sideways movement, but look at the VIX. VIX sideways and then rallying up into the close. That was not sustaining either. So, pros, you had a big up day. Negative, it was done by a lot of short squeezes. Lower volume. VIX didn't confirm the rally into the close. The notes did not confirm the rally. They gave up their gains. What else? What else am I forgetting? Dollar index did confirm the rally with the breakdown, but a lot of that, if we loop back around to the dollar index, well, you still have the yen marching higher, so that's just, the yen's just weakening. That actually helped the dollar. The euro, a pretty big reversal today, so that was with dollar weakness. But again, the euro, I'm really going to watch for a tag on this dollar pullback to see if this euro can retag the 50 and that completes the dollar pullback. The pound was interesting earlier, but then a nice pullback here. So it's going to be interesting. So we have more, I think, more negatives than positives. Let's peek in at the Dow. The Dow, no close above the 62.5, not even close. Back higher close than Thursday's, but still, in the daily rotation zone. Where are key levels? The key levels on the Dow, bumping this up a bit. Bumping that up. That's, it's right around this. Nah, I'm bumping it back down. Sorry. I'm still liking this a little better. 11,028. Why do I like this better? Emotional candles confirmed with these couple lows, but we got key close reinforced by a low. This broke, but then snap back above, confirmed by this low. So I like that. And then there's technically a zone in here, but I have it mapped by the bottom. Oh, that's the NAS. Sorry, I meant to go off the Dow. What was I doing? I already went with the NASDAQ. The Dow, the Dow, yes, well above the 62.5, but the Dow higher close than Thursday. No trigger of the double bottom. Now, this will get me more bullish too. Let me check in. Look at where the S&P closed. 3,725 for the 62.5. 399. I got to wait for the official settlement price, but it looks like it's going to miss that 3,700. So we didn't get the confirmation unless we get a weird settlement above 3,700. So I got to watch for the official settlement. But based off this final print, looks like we are going to close below 37.75. That's the official level. All right, back to the Dow. So tomorrow, 30,515, and then I'm watching this really close, this 50. 30,791, 30,800. Pullback area on the Dow. Minor will be going overnight to about 30,075. And then on a bigger pullback, 29,844. Russell. I know there's a number of Russell players in here also. Higher close than Thursday. Tomorrow is 1765, and then without using shorter term harmonics, I will just focus on 1780, which is key, not only from the fourth highs from the fourth, but the 50 EMA and the prior breakdown or the prior support becoming resistance. So this is going to be very key area on the follow through for the Russell. What else have I missed? Oh, I want to talk about one other thing. Then I'll get to more comments. This is my poster child for today. Roblox. This is the poster child. The squeeze play, the juice play to the upside. Huge day up in Roblox. Did not see anything out on it. This was the poster child for today. So Tesla also rally, no double bottom triggered. Remember earnings on Wednesday. Yes, Tesla did close above the 62.5. So we should see some follow through to the 223.50 area. All right, let's see. Well, yeah, if you don't set a course and stick to it, that 3 days could really chop up your portfolio. It's why you have to have your own mindset triggers. It's why I list off, when stuff stopped out, it stopped out. If there's no stop hit, there's no stop hit. And I'm not smart I'm smart enough to test stuff out. I'm not a dumb guy. However, I'm not smart enough to outthink the markets. No way. That's why I got to trade the price action and the probabilities. So unless the stop out happens on the S&P or we get another topping pattern, I got to stick with short-term bullish mode. Let's see. George's rallies to 4,000. All right. Yeah, good job, strategy. See, now you're watching the shorter term price action. That's what it's called, tape reading. There was a fair amount of selling into some of this rally, and yes, you were spotting some selling into the rally. Very good. What are my thoughts on Rumble? Now you got the takeover play, taking it buying it out. So what are my thoughts? It's now a lot of stuff like this I don't play. Why don't I play this stuff? Because until I see some more firm stuff like, hey, here's the formal offer and everything else, just not playing it, just not touching it, it would be a gamble to me. All right. Hey, Christo. Pay attention. See, this is another good point. Fantastic, Christoph. Almost all the sectors have daily inside bars. What matters more? Getting your time. You're looking at the breadth of the rally. And if you look at other stuff, I say the overall matters more. Personally. Like Apple. Huge power move on Thursday. Retracement Friday. Inside bar today. Even if this rally's got some more legs, Apple runs smack dab into major resistance with a gap fill play. I also think it has some more legs, but this, you have a mega cap that inside bar. So this is why I did a scan through of a lot of stuff. And it's just, I mean, the stronger ones today that had a bit of follow through, but look at the afternoon, even on Microsoft. You had the play, and then the afternoon just play in the morning, gap, and then yeah, couldn't sustain it. Could not sustain it. Google, see, spike up here again, could not sustain it. Even with a magnet overhead gap fill. So from the megas, we have not had the clear follow through. Now you're also going to see that in stuff like the sectors. This is normally more than I do go through. I mean, yeah, you had stuff like XLC up a bit. Energy. Let me just get back to, like here, energy inside day. Real estate inside day. So we need some of these to really break out. And real estate's not what I'm keying off of. Financials inside. Not a ton of follow through, not a strong close. Technology inside day. You start seeing these break above last Friday's high, we could get some more legs this rally. So I love the feedback from the comments and everything. We get to look at more stuff. This is very helpful. XLI. And these were stuff that's holding up. Like, remember I talked about stuff that stayed above the 62.5? But you had the big gap ups. You had the gaps on the open and then very little follow through. Good discretionary. This was more with the chasing after and covering some shorts. XLP. Look, doji, inside bar doji. Gap up, but that's about it. XLV was a stronger one. Healthcare was one that, that's a good one that was at the top of my list, but still an inside bar. Now healthcare starts breaking above Friday's highs, gets a lot more interesting. XLB, inside bar with not a strong close. SMH, we had a ton of people run into NVIDIA, but I looked at stuff. Again, this is one I'm not touching. I think there's a huge downside risk to this. Not only this is as I said, very low on my risk since we closed low on my list since we closed below 62.5. But then if you take stuff like this and you go down to NVIDIA, inside bar, it was a gap. This at least closed stronger, but still below key resistance. I'm going to watch for another rollover play unless this thing really gets legs, and then it's still a longer term rollover play. AMD, look at this. This, I mean, still stuck in this key range from the beginning of last week. This was nothing in AMD. Yeah, gap, but then nothing. That's where you look through some of this. Unless we can start to really see some things start to move up into their rotation zones a lot stronger, I don't know how much legs this have. Also, another thing I want to bring up, a lot of companies, remember, can't do share buybacks because of earnings season right now. It really starts to free up at the end of October for buyback windows open up again. What does that mean? For a more sustained rally, and I'm talking a more sustained rally for possible weeks, we got to really, I think, get in that share buyback window to open. Okay? So we could be in for some more interesting price action unless we start getting some stronger movement in the next couple days. We could easily still see another pullback. So, oh, you don't need me. We'll just set up. You guys look at the support structure you have. You just need me to launch a live stream, and then you can chat amongst yourselves. Let's see what. Christo, you made some money. Went the Nifty 50 banks took off around 1 a.m. Well, good job. Again, there's many different ways to trade. I think the dollar's just a correction. Matanshu. Did I say that right? If you're still here, I appreciate you tuning in. Matanshu, did I say that right? Please, and if I didn't put it in phonetically to help me, I'm really bad with names. That's why I'm named Mike. Because I can pronounce Mike. Hey. All in on Elliott Way. By the way, yes, this is a confirmed buy on the 5-wave Elliott pattern based off the close. Where did we get our official close? Did that print yet? Roblox, it was a squeeze. Let's see what else. So that's what it was. That's where we need more than a squeeze is overall what I'm saying. I'm just trying to catch up with comments. Christoph here's sharing some information. Christo. Christo, our spreadsheet guru, noticed that the Merc on the DAX was lagging until the American cash market opened, and Merc is on the Dow. He never noticed this before. And look at HSBC Bank on the Hong Hang Seng market, shows strength for the first time in a while. So you're really focusing on looking at different plays on the international markets. Very good. Why were you... What? I shouldn't have killed your good mood. We're still in rally mode. We just aren't in necessarily super sustainable rally mode yet. That's why it's always good to do some in-depth analysis. Probabilities still say we should see some higher prices. We have not gotten above the daily rotation zone. We have not got that key close above the 62.5, at least in the S&P. And somebody please get rid of that junk coming in on the chat. John says Spider going to 388 in 2 weeks. We could. Where are my higher targets? This is why I like to do the S&P better. My next targets, this is where we start getting into some pretty key over 38.45 is a pretty key area for me. Why? We got the 50, and I don't normally focus on lows, but we have a halfway decent minor significance here reinforced by the 50. So before I go to 388 on the spiders, which would be about, which I go just in front of that, about 384 roughly as a target area. And let's take a look at the bigger picture again of the whole sell-off. Then the next target of mine would be 39.14 to 39.23. If we did go into more rally mode, and where's that play with the fifth? The weekly is the top of the weekly is right in front of that 39, right up here. So that's my key next. If we can sustain more of a rally, that is my key area. Oh, I don't understand this. You do everyone prefer SPX instead of SPY? Well, SPX is a cash S&P. SPY is the tradable ETF, and I prefer done a lot of comparison. That's why the best probabilities test out on the futures. They test out. That's why I'm telling people, if you're trying to trade or trading successfully and you want to take it to the next level, do your analysis. Even if you don't trade the futures, do your analysis on the futures, especially the S&P. It will help identify things at higher probabilities. And you can get very cheap data feeds for the minis off the CME. Very cheap. I think through TradingView, they're $4 a month. Okay, it's worth $4 a month. That's nothing. Yeah, nothing's changed with Nvidia in the long term. What does a 10-2 yield curve tell us? Nothing right now. What does it tell us? This is a mess. It's not a double bottom, by the way. I don't see, because the second and third move beyond this. What I am watching is it's in consolidation right now. Really, I need a break. Here's the key levels after my joke, the triangle joke from last week. Right now, remember, I want to really see, once we actually start accelerating back to the upside again, getting in more into bearish mode. Right now, it's in consolidation. Minus 35 basis points, going to be watching for a break above there or a break back down, especially on a closing basis below negative 52 basis points. Until then, it's saying nothing to me. See this consolidation before in August, before this little pop. Pullback consolidation mid-September through mid-October. So we're in this consolidation mode. So again, the last time we popped was really, you could go slightly higher, minus 33 basis points, but somewhere in that area, we'll start watching for the pop, which we could get more of a sustained short-term rally. But then if we start taking out minus 16 basis points, I'm watching for the market to get slammed. Why? Historically, as you accelerate towards zero and then take zero out, watch out below in the markets. Or if we start making new closing lows below that 52.53, minus 52.53 basis points, we could start seeing more downward pressure. Right now, Good afternoon, Options 22. Waka Waka only appears when the market is red. Well, sometimes he appears when it's green to say, why is it green? But Waka Waka is one of our more bearish people. And I put you in one of the more bullish people, Coco. Why were the airlines so weak today? No idea. I did not focus on the airlines today. So I really don't have any comment on that. I'd be making something up if I were to comment. And I didn't see anything scroll by or any news that was worthy for the airlines. So I'm not going to make something up. I mean, especially with oil. Oil was not huge. By the way, there is a potential rotation, very aggressive rotation buy pattern oil. But yeah, it pulled back but held key support. Airlines in a lot of places aren't in a there we go. aren't in a fabulous. A lot of stuff is trading the same. But there could be a nice play if it does, if this rally does sustain and you like United Airlines 3650, a break above there. You could see a little run, especially with the gap. Yeah, you have overhead. I use this breakdown zone. If you start breaking above, this is where I will pay attention to highs. About 36.75. 37.56 would be a stop raise, and I'd personally be targeting if this can sustain and we get some strength in the airlines again, and then I'd be watching for these gap fills. Back to American would be above 13.60, and you still do have a little gap fill up here back to 14 bucks. So there could be a little gap fill play, a little quick gap fill play up above here. But then you're still going into major overhead resistance. So that's where it would only be a scalpy play in some of these airlines for me. The Spat King says the bottom is in, so it must be the bottom. Oh, don't start me on the Spat King. I know you're kidding. But if he's saying the bottom's in, then the bottom's not in. But I don't think the bottom's in. Not long term. Not from a technical or from a fundamental perspective. This is a tradable bottom, not the bottom. But I did not see that options 22. And everybody putting stuff in the live stream that helps. I'm bullish because I don't want people to lose their savings. I'm not evil like you got. Huh? What does evil have to do with this? A lot of people are out of the market or holding cash. That's not evil. You know, and short selling isn't evil also. You know, short selling uncovers a lot of the fraud out there, and you don't want fraud in the market. This is what people miss. This is what frustrates me when people attack short sellers. Shorting, especially professional short sellers that dig up information on companies, find interesting things on their books or fraud. That is a lot of work. And you know what? Some of the best police in this market, they're not. It's not the SEC. They're late. They show up. You know, anybody watch the original Scooby-Doo cartoons? You know, when the kids do all the, you know, Scooby and the kids do all the detective work, and they essentially crack the case, and then the police show up, and at the end they unmask the bad guy or bad gal or bad person. You know, the police are there, and then they unmask the person. Well, who did it? You know? And it's like, oh, you rascally kids, I would have gotten away with it, except for you. The short sellers are like the Scooby team. They're the Scooby team. And then the SEC, you know, it's like all the people who were calling out Madoff for years and doing all the stuff. Hey, look, from a statistical analysis way, he can't be producing these returns. They dig into these companies like Wirecard. Literally, people got their lives destroyed by digging into Wirecard and proving, and then it was like, oh, well, it was a fraud, and their lives destroyed. Actually, the short sellers' careers got ruined over wire fraud, Wirecard, but it was proven right. You know what? They get a lot of this riffraff out of the markets. You want a better functioning market, you should love some of these short selling firms. There's nothing wrong with short selling. It keeps the markets honest. If we didn't have short sellers, you know, the first sign of a market you don't want to be in is when they ban short sellers. So there's nothing evil about going short stuff. Actually keeps them more functioning, and bulls should love the short sellers. Because if you don't have shorts, you don't get short squeezes. Too many people, and when CEOs blame the gosh darn short sellers, they're keeping my stock down. No, you're just trying to scapegoat something. As soon as I see a CEO blame the short sellers, I start looking in that company more. You know, so many things have gotten a bad rap. You play both sides of a market. If you don't want to short or you don't like to trade from the short side, fine. You go to cash, you sit out stuff. But there's nothing evil about it. And there are times where you don't want to be in a market or you don't want to be long a market. Like Ramsafal is not in here today, but he went to cash. He's a longer term trader. He's actually in the financial industry. He's in cash. Smart move. Nothing wrong with that. Wait for the long term buy patterns. Wait for the long term buy signals and put your money back to work. Oh. So, it's I, I just I'm not going to allow comments. I mean, you're well. I mean, I'm going to allow comments, but I'm not going to let comments like that go unchallenged because there's a lot of naivete in the markets and people scapegoat shorts, especially when the market's going down. You know what makes the market go down? More it's generally people puking stock or things going selling rather than aggressive shorting. You do sometimes get some aggressive shorting, a broad market shorting. Like there was some broad market shorting on Friday by hedge funds, but look, they just got their rears handed to them today. I like this. Being bearish isn't evil. Hey, Mike, can you trade futures with only 500? I wouldn't recommend it. That's a little too small. I don't even know if you can open an account for 500. You're asking the wrong person. Maybe there's a futures broker that will take, or there's something that will mimic the futures like a CFD for that. But I think you need to save up a little more money. I wouldn't recommend trading even the micros with under a $5,000 account, just so you can withstand some and use some proper stops and withstand some losses. Coco watches too many movies. See, shorting is an important element in authentic price discovery. I completely agree. Look at the countries that start banning short selling. Though I don't want to be in those markets. And if this country ever goes after the shorts to the extent we're banning short selling, watch out. Watch out. Yep, Hindenburg called Nikola fraud on September 2020. You want to know something in the trial? The Hindenburg research, a bunch of their talking points in the trial from when was it ended last week? Times born together, but a lot of the senior executives now they couldn't refute the point, and they even affirmed them on the stand. But Hindenburg, I remember this. A bunch of people went after them. All they were saying is, "Hey, you can't. All right, we've got to clean up this. If you're going to be out there as a publicly traded company, they weren't trying to put Nikola out of business. They were saying, hey, there you got some major inconsistencies, and the CEO gets indicted or gets convicted on 3 out of 4 fraud charges. Short sellers. Thank you for bringing that up, Raj. Yeah, and they were right. See? Don't discount them. You don't have to short, but don't hate the short sellers. And shorting allows portfolio managers to earn returns on clients in bear markets, crucial for those getting close to retirement in a bear market. Very good point strategy, Freeman. It also allows, if you don't want to get rid of a bunch of longs, how do you hedge? You can go short the market via futures. You can put on put spreads. I mean, even selling calls against positions is a limited gain hedge to the short side, technically. It's negative delta. Yeah, we would have a bunch of Enrons around. We got some smart people, and I am really impressed. I am really impressed by you guys and gals. We have some very, very smart individuals in here. Not drinking Kool-Aid. Tesla bipolar as hell. So hard to read direction here with reversal after reversal. Break around and front. And also remember, Tesla's still a story stock because of the Twitter stuff. And you got earnings coming up. And you notoriously have these squeeze plays in Tesla, which you've amplified stuff with the Twitter. The Twitter. Yeah, you can go with a 5K for for micros. You can go with 5K for micros. Now, if you're trading minis, you need a lot more. But micros, you can. I've seen firms have a 5K account. Would not trade anything more than the micros, though. Though I don't think they'll even allow you. The micros, though, I'm super happy to see me put in these micros. Yeah, see, strategy. You can't have proper risk management with 5,000 or with 500. You can with 5,000 at least. You have to be able to withstand some proper stops. If you can't trade with proper stops, and I'm talking not just futures, I'm talking with whatever. If you can't, remember, a stop is not, you should not gauge stops by how much you're going to lose. You should lower your position size. You put a stop where the trade or investment would be invalidated if it got below that level for longs. You do not gauge stops by, look, if I put it based off guy owning 100 shares and I want to risk $500, so I'm going to put my stop 50 cents away. That is not a smart way to invest or trade. You need to determine levels where the stop invalidates your position. Okay? And then you position size appropriately to manage the dollar risk. Do not back into stop levels based off of putting on your position size first and then saying, I can only, based off my position size, I can only risk this amount. And if based off your smallest position size that you can go into, like let's just say in the futures, if you're trying to trade one micro and your stop would take you farther than your risk amount per trade, then you have to pass on the trade. You don't change your stop level to accommodate a trade. Please don't do that. I know many people in here are smarter than that. I'm also talking to the people who watch this and don't attend live or who might come across this channel because it keeps growing and are newer. Stops are where the trade you entered would be invalidated. The best time to come up with stops is before you even enter the position. Why? Because you're objective. Once you're in a position, objectivity can go out the window. Why? Because now you have actual money on the line. And when there's money on the line, people tend to look at things from a skewed perspective, at least until you've been doing it for a long time. So the best time to come up with stops is before you even enter the trade. I come up with my entry, my stop level, and a target or multiple targets. Why do I even come up with targets before I enter the trade? Because then I know at this level, what can I do? I can raise a stop, I can take partial profits, I can do both. But I've analyzed it objectively. Also, without targets, I cannot come up with a bare minimum reward to risk level. If I can't come up with a reward to risk level, I can't come up with my probabilities times reward to risk gives me trade expectancy. If I don't have a positive trade expectancy, I cannot take the trade. That's why I love a lot of people in here, and thank you for being here because we have many smart people on this channel. We don't have a lot of sheep in this channel. We have smart thinking individuals, and I'm not saying, because you can disagree with me at any point. Just be smart about it and have a reason for it. Right? It looks like settlement is below that 3,775, so we didn't trigger the increased probabilities on the S&P yet. Wow. Was that settlement? Did settlement just drop? Because it's not back open. Wow. Did we just drop settlement back down to 36.89? Or is that just an errant something with the data feed? Does anybody have settlement on their quote on their trading platform right now? Is JPY topping? Be careful with the yen from the fact that it's run up, and we will probably get another intervention. The problem is, where's that intervention level? I think we'll see it before 150, but I'm not the Bank of Japan. If they already intervened back at 145, we are now a lot higher. And remember, they say it's the rate of the move. Well, we've had a pretty strong multi-day rate change higher. I'm prepared for a potential intervention again, but that would just take us back probably to the breakout zone. And will affect as I said this morning, will affect the notes and bond market, because they'll most likely be dumping U.S. treasuries to buy their yen and strengthen up their yen. So there's a double whammy there. Christo, check out AMP Futures if you only have foreign cash. They have an auto stop. So there's a recommendation. I don't trade with AMP Futures, but that's from Christo, so you are welcome to check them out. Thank you for putting that in there. Like attracts like, smart people are drawn to smart people. Yes, that's why we have a wonderful channel here. And we don't attract a lot of hype. And you don't see me putting it out there. Although you'll probably see some more clickish style for some pre-recorded stuff I'm going to do. I'm going to do some more deep dives into stock analysis. And we'll probably see some more clicky-click headlines or titles to that. I've been advised to do that. I hate it, but you get more people at least checking out the channel, and then the people who are just into that weak sauce stuff will fall away quickly, and the smart should stay on long term. But if you are going, that's a weird, like PayPal, and this is actually one I'm gonna be doing some analysis on PayPal to put it out there to show how I walk through a bunch of stuff. But if you see like PayPal 56% downside potential still in PayPal, yes, that is why but it will be a true headline. It will not be made up. It will be based off of my analysis, but you will see some videos like that, and that is why. To get people to try to at least watch it so we can attract some people that might want to stick around. All right, thank you. Thinkorswim and Trade08 have it at 69. So either way, we'll just keep. Either way, so far we've not triggered that 62.5 level. That's how important I think that level is, because it tests out really well. So if you're wondering why I'm harping on it, because hey, I want to know probabilities. When I get a big probability shift, that's important. You know how I'm here saying, let's trade with the probabilities again and trade expectancy. If you manage your risk, everything takes care of itself. Yes, that is very true statement. It's why I always talk about risk first. It's why we also always analyze both sides of a market. If they're dumping treasuries, does that mean? Yeah, well, dumping treasuries will also, they're going to have to dump treasuries to buy the yen, and buying the yen will strengthen the yen, and that will go. It's sort of a double whammy against the dollar index. So that could be a short term pressure. But long term, at some point the yen will blow in my book. If they're going to try to keep remember, they're trying to still keep this. They're working hard. They're having to work hard and by I'm talking about the Bank of Japan. They have the 25 basis point peg on their 10-year. So they have to keep that. They are the market of the 10-year. That's what's scary. What happens when Japan, the Bank of Japan, essentially owns the whole Japanese market? That's going to get interesting. I can't stand clickbait, but I keep getting told, it's going to be authentic. You will not see me put up a headline that is not authentic. I just can't stand it. But I want to keep this growing. So maybe we'll get some good people. And the silly people won't understand me for more than 5 minutes and they'll tune out. Japan is liquid. I'm not worried about the dollar in the short term. Long term, I am. Short term, I'm not. Japan's got a lot of reserves, but they're also trying to keep a peg, and this peg will get harder and harder, especially as inflation creeps more and more into their economy. It's going to get harder and harder to keep this 10-year at a quarter of a basis point. All right. That's about it for today. Thank you, everybody, for being here. Thank you for all the wonderful comments, the conversation above amongst yourself. I really do appreciate it, and I will be back tomorrow morning. With that, I shall talk to everyone later. Bye for now.